to weekly Saturday knowledge sharing webinar organized by Mehta and Mehta. Thanks for all your support since so many years. Today's topic on Masterclass on Companies Act 2013 is an insight into the corporate social responsibility. And today's we have with us our panelist. And to first introduce our panelist, Mr. Sachin. Mr. Sachin Mardika comes with 30 years of rich multi-domain experience as a chartered accountant, cost accountant, and having worked in diverse sectors. He is currently the CFO of an education startup in Gandhinagar, Gujarat, namely Namtek. Namtek is a company that focuses on building Industry 4.0 skills for working engineers. He was earlier with Reliance Foundation, where he served as a Chief Financial Officer and led the CSR, Finance, Governance, and Strategic Development Initiative. He has been associated with the CSR field ever since the formulation of CSR rules. His areas of expertise include CSR governance, compliance and reporting, CSR planning and structuring and implementation. His career reflects his conscious commitment to some personal values that are driven by deeper purpose to impact lives positively. He likes to travel and is a interestingly wildlife photographer. Welcome, Mr. Sachin. Thanks for your time.
Thank you so much. Thanks for having me on board. Thank you so much.
Thank you. And I think the participants will really benefit with your diverse experience in a very robust. Thank you. Thanks a lot for your time.
Thank you so much.
Yeah, we have with us today's presenter. Today's presentation will be done by Ms. Dolly Thakur, Manager CSR Practice, Mehta and Mehta. And our panelists, myself, Mr. Bala and Mr. Sudhakar. Now, today we decided Mr. Bala and Sudhakar is icon. I need not introduce them. Everyone knows them. So we will straightway start with our presentation so that we can devote much time. And as regards today's topic on CSR, very vibrant, always on, always hot topic, always questions, always confusions, and always you explore something. I know everyone face that, and sometimes people frustrate. To do good work also, there are so many confusion and fear. So friends, it's for the compliance and lot of issues are there. And I will not say much word on the topic, but I'll request Mr. Sachin to say few words and his views on the topic, and then Mr. Sudhakar, and then Bala, and then Dolly, you can start your presentation. Over to Mr. Sachin, please.
Sure. Thank you, Deepti ji. And good morning, all my fellow panelists and all the everyone who has joined in spite of being a long weekend. And I do hope that this will be an interesting webinar for all of us. And CSR, as you know, is an evolving field of law. I mean, it's less than just about 10 years old in the history, as they say. And so there will be a lot of questions, a lot of practical insights from all of us. And we would actually try and address many of these. And at the outset, I should say that there could be a couple of questions which remain unanswered or could be for future. But I think those are the questions which will set the ground for the next webinars to come.
Thank you.
So yeah, but very interestingly, I'm a finance person, so I thought, when I started my career in the formal CSR space, 2013-14, when the law was enacted and all, we had just started. I mean, there was this great thought coming in, but let's look at last year's numbers. There are about more than 24,000 companies in the corporate sector which have some kind of a CSR obligation. Almost close to 30,000 crore was spent by Indian corporates, big or small, right from a few thousand rupees to a few hundred crores. That's the spread. Uh, in terms of growth, I mean, at 30,000 crore, this is 3x growth in 10 years. So the good part is that, the Indian companies seem to be doing well, which is a good news for all of us. But also, I think we as CSR practitioners are kind of giving a target to the larger corporate world that this trend must continue. So very interestingly, the cumulative amount, I mean, this data is available in the public domain, is something like 1.84 lakh crore over the last 10 years, all numbers you put together and all that. And that really set me thinking when all of us from, chartered accountant fraternity, company secretaries played a major role in formulation of these rules and government, etc. I don't think we had imagined this kind of magnitude. And that to me is one of the biggest thing of the last one decade, almost 200,000 crores and growing, in future to come. So there's a great role for practitioners, all of us who are there today on this webinar, to actually look at how constructively we can look at this. It's an emerging area of practice for the professionals. Similarly, those of us who are in the corporate sector, the implementation side, we have to be conscious of the fact that it's a huge opportunity to actually, contribute to the nation building process. I'll just touch upon three things, what has changed, and I think that will set the tone for today's deliberations. First is CSR is a reality. I mean, it's initial thing was that whether it's going to be for few years or not and all, but that's not true. It's here to stay. 2%. Number one, the sector per se. When you look at social development sector, like over the law which existed ever since the close of century or beyond, has actually undergone a change. So now we have far more professionals who specialize in this area of field, both at design, implementation, etc. So there's a lot of professionalism which has come in how the CSR will be actually implemented and not just cutting checks. Third thing at the practice level, increased compliance. I mean, the sheer fact that you have more than 24,000 companies which are now listed means there is somebody who's actually tracking, there is somebody who's actually creating databases of companies, and the companies themselves are looking at this 2% in a more proactive way. So there is increased compliance. Companies are coming forward to disclose their 2% obligation, etc. At a policy level, I think the most significant change has been that it is now a board-driven process, and I'm sure as we go through the regulations, we will come to know. So suddenly, the board has come into play, uh, and that brings us to the point of the seriousness with which both the regulators as well as the companies themselves are looking at it. It also means closer monitoring by the authority. So just as I quoted a few numbers because these numbers are available because somebody is collecting them. Secondly, there is also more disclosure and closer public scrutiny. So both the regulators as well as researchers, academicians, all of them are actually looking at CSR and what role it is playing in addressing some of the challenges. So that to me is a no longer is just a spend on a couple of activities in and around a plant location, but I think at a policy level also there's more disclosure requirement and greater public scrutiny, and more about it as we progress in the session. There, however, remain a couple of contentious issues. The first is the businesses themselves have changed a lot in the last 10 years or so. we now have the profitable businesses, the new age businesses that are coming up uh, are clearly beyond the traditional manufacturing kind of thing where you have a factory and 10, 20 villages. Now you have pan India companies, pan India organizations. So I think that's one challenge in terms of how and where do you actually take a CSR activity? How do you prioritize your impact area? The second a contentious issue, or I think it's a big challenge, is in terms of this 3-year track record thing. So the law, excuse me, the law does provide that well, if it's a company, Section 8 company or a trust, etc., promoted by the company, then the 3-year is not applicable, which is fine. But I think there's a lot of action which is happening in the social investment space. There are new startups which are contributing hugely to generate a significant impact in areas such as climate change, environment, sustainability, etc. And there has to be a mechanism by which these startups could also be kind of funded. Uh, there is in parallel disclosure that I'm aware of happening through the social stock exchange, but I think we can park it at that level. And the third is, uh, last but not the least, is the alignment with the direct and indirect tax laws. And I think CSR, because it's part of the Companies Act and etc., has a certain stipulations, but some of the provisions are not really harmonious when it comes to looking at from a GST perspective or from an income tax perspective. So I think these three challenges remain, but I'm sure that as we move up into the next decade of CSR, many of these regulatory aspects will also be addressed. So I think I'll stop here and and allow my co-panelists also to share a few of their points and insights. Thank you so much.
Thank you, Sachin.
I will just I will interfere. I would like to clarify that here, whatever questions you raise and answer given is the opinion we hold. It may not necessarily even the firm, opinion. And also, please, we are request to don't take it as a legal opinion because that right we kept. And may I, Sudhakar and Mr. Bala, if you suggest, if you agree, we are 11:15. Can we straightway start presentation if you don't mind, and your views can be added during the presentation?
Yeah, sure. Go ahead. No problem.
Yeah,
Go ahead.
Sudhakar.
Yes, certainly.
And literally, I may go out for certain time, so I may leave the presentation, may enter later on. Thanks. Thanks, everyone.
Dipti,
Yeah,
although you said there is a long weekend, people, etc., see the number of attendees.
I know.
This itself shows what is the importance of the topic, what we are discussing. Yeah.
Just ensure that we don't lose the business of legal opinion.
True, very true.
Honestly, there are 3 legal opinions going on CSR in Mehta and Mehta at present at HO level only.
Okay, over to Dolly. Please start your
Yeah.
presentation, please.
Yeah.
Hi, good morning, everyone. I hope this slide is visible.
Yeah, very much. You know to put it in the presentation mode.
Yeah. Just a second. Okay. So today, as already, introduction given by Sachin sir, we will directly start with the presentation on CSR compliances. That is section 135 of the Companies Act 2013. So here in today's presentation, we have covered the, concept of the CSR, why it was started. And then we will move towards the section 135 and the CSR policy rule. And thereafter, we will cover the penalty provisions along with some case studies. So talking about the CSR, So at voluntary level, there were many corporates who were doing the charity. So first time CSR in India has evolved through different phases like community engagement, social responsible production, and socially responsible employee relations. India became the first country to legislate the need to undertake CSR activities and mandatorily report on CSR initiatives under the new Companies Act 2013. Also, CSR is a long-term and a structured commitment towards the development of society, environment, and its welfare. It's a legal responsibility that cast upon a corporate body to address the socio-economic environmental issues being faced by the entire nation. So in 2013, under the Companies Act 2013, Section 135, CSR got its recognition, and along with the company's CSR policy rules 2017, and there was also one Schedule 7 for CSR activities. Thereafter, from 2013 till now, there were many series of amendments came in. So there was a high-level committee got set up in year 2015 to keep a track on the impact assessment and the CSR provisions. Then in the year 2018, again, report of the high-level committee on CSR responsibility 2018 was constituted under the chairmanship of Sri Injeti Srinivas, he was the secretary of MCA, to review the existing framework and formulate a roadmap for future implementation. And the committee has, provided the several recommendations. So I will just share a few of them. They have recommended that implementing agencies should be treated as a partner, then not as a service provider. Second, balancing local area preferences with national priorities. Impact assessment studies for CSR obligation of INR 5 crore or more. Companies with CSR amount below INR 50 lakhs should be exempted from forming a CSR committee. Then there were several amendments under the Act and the rules. First one was in the Companies Amendment Act 2017, which was notified, and in that amendment, for the computation of the CSR applicability, it was said to check the immediately preceding financial year. Later on in 2019, there was an amendment where it was stated that to shift from comply or explain to comply or pay fine. So basically, it was a disclosure in the annual report. Then in 2020, Companies Amendment Act, which was issued on 20th September 2020. Under that, there was it was the substitution of the Section 135 subsection 7, where it was said that shift from comply or pay fine to comply or pay penalty. Later on, under the company's CSR policy amendment rules 2021, there were many important amendments happened in the definitions of the CSR, ongoing project, administrative overheads, impact assessment, net profit. Then there were amendments in the website disclosure, where the company has to state about the CSR committee constitution and CSR projects approved on their website. In addition to previous disclosure, they were doing it on the on their website. Then there were certain amendments in the CSR reporting, capital asset, and also the CFO or the equivalent person was given the responsibility to get the utilization certificate from the implementing agency or the NGOs. And then in year 2022, there was an amendment in the impact assessment. So basically, a company can book the impact assessment for the expenditure towards a corporate social responsibility for that financial year, which shall not exceed 2% of the total CSR expenditure for that financial year, or 50 lakh rupees, whichever is higher. So earlier it was 5%. In 2022, it has become the 2%. So there were several, amendments happened in the Act and rules. Moving onwards, first we will see certain definitions. We will start with CSR committee. CSR committee means the corporate social responsibility of the board, referred to in section 135 of the Act. CSR policy means a statement containing the approach and directions given by the board of the company, taking into account the recommendation of its CSR committee, and includes guiding principles for selection, implementation, and monitoring of activities, as well as formulation of annual action plan. Then there is a definition of the CSR, which states that activities undertaken by a company in pursuance of its statutory obligation laid down in section 135 of the Act in accordance with the provisions contained in these rules, but shall not include the following, namely. So the first point was related to the COVID-19. Then which was subject to the conditions that such research and development activities shall be carried out in collaboration with any of the institutions or organizations mentioned in item 9 of the Schedule 7 of the Act. Details of such activity shall be disclosed separately in the annual report on CSR included in the board's report. Any activity undertaken by the company outside India, except for training of Indian sports personnel representing any state or union territory at national level or India at international level. Contribution of any amount directly or indirectly to any political party under section 182 of the Act. Activities benefiting employees of the company. Activities supported by the companies on sponsorship basis for deriving marketing benefits for its products or services. Activities carried out for fulfillment of any other statutory obligation under the law in any force in India. So basically this all activities, if company is spending on all these 7 activities, it is not get considered as a CSR. Later on, moving onwards, let's see the definition about the net profit. Net profit means the net profit of a company as per its financial statements prepared in accordance with the applicable provisions Act, but shall not include the following, namely, any profit arising from any overseas branch or branches of the company, whether operated as a separate company or otherwise, and any dividend received from other companies in India, which are covered under and complying with the provisions of section 135 of the Act. Provided in the case of foreign company, which are covered under the rules. So for foreign companies, net profit means the net profit of such company as per the profit and loss account prepared in terms of the section 381, read with section 198 of the Act. Then this is a very important definition given under the rules of the administrative overheads. Administrative overheads means the expenses incurred by the company for the general management and administration of corporate social responsibility functions in the company, but shall not include the expenses directly incurred for the designing, implementation, monitoring, and evaluation of a particular CSR project or program.
Dolly, someone is asking to show the previous slide, I think.
This one?
I don't know. They are just to put it here. I saw the message. Please show the previous slide. That's what it is. Yeah. Are you referring this slide, please? Yeah, it is Manmohan. Is this the same slide? What you are referring? Before this one, he's saying.
Okay.
Is this the one?
Can't he put what is the question exactly?
Okay.
Instead of
I don't know. He
The
has put,
definitions.
he has put yes. Yeah.
Okay. So I can move now.
Yeah, you can move now.
So ongoing project means a multi-year project undertaken by the company in fulfillment of its CSR obligation, having timelines not exceeding 3 years, excluding the financial year in which it was commenced, and shall include such project that was initially not approved as a multi-year project, but whose duration has been extended beyond 1 year by the board based on reasonable justification. So now we will start with section 135, subsection 1, which talks about the constitution of CSR committee. Every company having net worth of rupees 500 crore or more, or turnover of 1000 crore or more, or net profit of rupees 5 crore or more, during the immediately preceding financial year shall constitute a CSR committee of the board consisting of 3 or more directors, out of which at least one director shall be an independent director. In case company is not required to appoint an independent director, it shall constitute its CSR committee consisting of 2 or more directors. Rule 3 of the CSR talks about the applicability.
Just 1 minute, Dolly, please go to the previous slide.
Yeah.
See, sometimes a question has been asked to make it that the independent director position is vacant. So that point of time, whether the CSR committee can continue with 2 directors. Answer is that when the appointment of independent director is not required, this is the requirement. When independent director is required, it is the company is obligated to appoint the independent directors within the timelines given, and then also to take him on the CSR committee immediately. Okay?
Yes, sir.
Yeah.
So rule 3 of the CSR talks about the applicability. Every company, including its holding or subsidiary and a foreign company having its branch office or project office in India, which fulfills the criteria which we just have read, shall comply with the provisions of section 135 of the Act and these rules. Now, in case of the foreign company, whose net worth, turnover, or net profit shall be computed in the accordance with the balance sheet and P&L of such company prepared with the relevant section 381 and section 198. Now, if company is having any amount in unspent CSR account as per subsection 6 of section 135, it shall constitute CSR committee and comply with the provisions contained in the subsection 2 to 6 of the section 135. So in case of a private company, public company, and a deemed public company, if they are triggering the limits which is stated in the section 135, CSR is applicable. For section 8 company, again in the foreign company, CSR is applicable once they are crossing that limit of net profit, net worth, and the turnover. Company which has not yet completed 3 years. So CSR is still applicable as they have to check their immediately preceding financial years. Average net profits made during the immediately preceding financial years are applicable. As per section 135 subsection 2, the company has to disclose their composition of CSR committees in their board's report. Subsection 3 of section 135 talks about the CSR committee. Shall formulate and recommend to the board a CSR policy which shall indicate the activities. Yeah. Formulate and recommend to the board a CSR policy which shall indicate the activities to be undertaken by the company in areas or subject which is specified under Schedule 7. They also have to recommend the amount of expenditure to be incurred on the CSR activities every year, and also to monitor the CSR policy of the company from time to time. Section 135, subsection 9 talks about where the amount spent by the company on CSR does not exceed rupees 50 lakhs. CSR committee need not to be constituted. Rule 5 talks about the CSR committee. The committee shall constitute CSR committee as under. For a company which not required to appoint independent director, they can have the CSR committee without independent director. For the private company, having only 2 directors on its board, CSR committee with 2 of such directors can be formed. Foreign company shall comprise of at least 2 persons. One person shall be specified in section 380 and another person shall be nominated by foreign company. So this was it about the CSR committee. Now we are going to look at the CSR policy. Section 135 subsection 4, the board of the every company shall consider the recommendations of CSR committee and approves the corporate social responsibility policy. They also have to disclose the content of such policy in its report and also place it on the company's website. Ensure that the activities are as included in the CSR policy of the company are undertaken by the company. It is recommended that a company should outline a CSR policy to reflect the vision, mission, and the goal on a broader level. CSR policy should articulate broadly target group, marginalized group, or geography, local or wider area, or sectors. Sectors can be health, education, or environmental sector. As per Rule 2 definitions, CSR committee will formulate and recommended CSR policy to the board of directors who are going to ultimately approve the CSR policy. CSR policy means a statement containing the approach and direction given by the board, taking into account the recommendation of its CSR committee. CSR policy is like a guiding principle for selection, implementation, and monitoring of the CSR activities. CSR policy is a principle for formulation of annual action plan. Rule 5, again, as we have seen earlier, Rule 5 talks about the CSR committee. So here we are going to look at the annual action plan. So the CSR committee shall formulate and recommend to the board an annual action plan in pursuance of its CSR policy. Annual action plan will consist of list of CSR project, manner of execution, modalities of utilization, monitoring and reporting mechanism, and the need of impact assessment. Board may alter such plan at any time during the financial year as per the recommendation of its CSR committee with reasonable justification to that effect. Then as per Rule 9 of the CSR policy, the board of the directors of the company shall mandatorily disclose on their website for the public access CSR policy, composition of CSR committee, projects approved by the board. Then this is a very important subsection which talks about the CSR.
Why can't you take up the questions so far before you go to section 5 and 6?
Okay, sir.
Whatever the questions are there, let us take up some questions.
Okay.
Okay, we can do that. Whether all the previous provisions are covered in CSR amendment policy rules 2021.
There much more than that is covered in the rules 2021.
Does it cover cost of the free hotel, free food, and hostel for the charitable school. I think they are talking about the expenditure.
See, that one thing I would like to tell the participants is that two, three things importantly. Number one, charity is not CSR, because charity is always at the whims and fancies of the person who is doing the charity. Whenever he feels like he can do, whenever he feels like he can stop. As far as CSR is concerned, it is more a structured expenditure while discharging its social responsibility. That is the primary difference. Second thing is, whenever we have doubts about what is a CSR, whether it falls under the definition of CSR and all, in the rules, the definitions have been given very comprehensively and very elaborately. What is covered under the CSR and what is not covered under the CSR. So my request and submission to all the participants is that whenever we have a question like this, please go through the definitions thoroughly. Apart from that thing, Schedule 7 also. Most of the times you will find the answers to yourself. In addition to these two, there are three more things which will help you. Number one, the FAQs of MCA, the FAQs of ICSI, FAQs of ICAI. In addition to that, finally, there is a guidance note of ICSI also is there on CSR. If you go through these things, you will find the answers. You don't need to depend upon anybody for giving you an answer. The reason being, n number of times you may ask n number of questions whether this is covered or not, different permutations, combinations. Say, for example, does it cover cost of free hostels, free food in hostel charitable school? Two, three people may give you two, three opinions for this thing. Somebody may say, yes, it is covered. Somebody may say, no, it is not covered and all. So this should not happen. Okay, that first and foremost thing is you have to do your homework thoroughly. The reason being, as Sachin has rightly mentioned, the amount of CSR expenditure is being monitored by the regulator very closely, and the expectations of the corporates which were supposed to be there, which was not there. That is the reason actually why this 22nd January 2021 rules have come. In fact, if you, I think the participant must be knowing that in Companies Amendment Act 2019, the ministry has brought even the criminal penal provisions for non-compliance of CSR. There was a big hue and cry, and after that, they have withdrawn that by way of Companies Amendment Act 2020. What is the reason for that? The reason is that when in the initially the comply or explain approach was there in 135, that means the CSR is supposed to be spent in case of any reason. If the CSR is not spent, it is to be explained in the board's report. Most of the times it was interpreted as if it is a birthright of the people that don't spend the money, just explain it in the board's report. That is the reason actually why these rules have come. And in fact, ministry went as far as in stipulating even the criminal penal provisions. So definitely any kind of non-compliance will not be, I mean, and the regulator may not tolerate it. So better to understand these things thoroughly before implementing it. And similarly, also some participants have to understand the difference between CSR activity and an ongoing project. This is also equally important. At the same point of time, ongoing project is defined, CSR is defined. So there is no question of asking anybody for this thing, according to me. That's what my answer, Bala.
Sudhakar, well said. One thing I just want to add, our institute has brought out excellent guidance note in almost all the topics which are of relevant. But unfortunately, people don't refer that. I would request all the professionals, please go through the guidance note, which not only explain, it also give the best examples of the situation and explaining the things. So that is what I would like to add. Let us go to the next one. While calculating the CSR liability for the year 24-25, CSR debited in the profit and loss account for the year 23-24 is added back or not?
Now let me take that. So I think the rules are very clear. It has to be as per section 198, and the computation has to be done. And that's it. So section 198 allows all the legitimate business expenditure to be debited to the can be claimed as a deduction. So I think that's the guiding guiding provision for us.
You're right, Sachin. It is actually exactly how we calculate for the managerial remuneration. The same section here also it is
Same
applied.
section. Yeah.
What appointment is required to be considered
Just one
under
minute, just
section
to add to
190?
that, Bala, 1 minute. See, Sachin has rightly mentioned, whatever the business expenditure is there, it is allowed. And CSR is not a business expenditure under the Act. CSR is not a business expenditure even under the Income Tax Act also, that they are not allowing it for the tax purposes. But as far as the Schedule 3 is concerned, Sachin, do you think that it is not a part of business expenditure or it is a part of business expenditure?
So there are actually two practices which are prevalent. Companies which are adopting the implementing agency route are essentially, debiting this as part of their other donations and grants given, which are allowed uh, in as part of the Companies Act. It's a general donation. In income tax, the treatment could be different depending on the income tax regime the company has opted for. Uh, the gray area is in terms of where the company has directly spent money. Now, where the company has directly spent money can come under two categories. One is the capital expenditure. The second is the OPEX. Again, for capital expenditure, the rules are very clearly established, and I think we will cover that subsequently. That the company may spend on capital assets, and however it has to be transferred to a separate Section 8 public, etc. So those capital expenditure is well defined. It's only in the case of OPEX, operating expenditure, which is directly incurred by a company, is a gray area whether that can be considered as a business expenditure or not, because this 2% is not a business expenditure. It's more on the lines of appropriation is how I look at it. Right. So I think that's
Anyway, I think, see, according to me, Sachin, that when you are arriving at 2% of the expenditure, that CSR is anyway you are arriving at for the purpose of CSR. So the CSR money is to be, if at all it is deducted, it is to be added back according to me, and then you have to arrive at that amount on which 2% is to be arrived at.
correct. I think we can take that.
Yeah. And
Just
similarly, as far as
one
capex
thing.
is concerned, nothing to worry because capex is anyway not part of your P&L account.
Correct. There's just
Yeah.
one thing, Sudhakar, I wanted to add to what you said, and that basically the guiding principle of CSR that is that it has to be in a program or a project mode. And I think, therefore, individually picking up selective expenditure items and claiming it as CSR will not really fulfill even though of charitable nature, will not fulfill the objective of it. So there has to be a program per se. And if let's say the CSR policy of a company permits supporting deserving children from underprivileged communities for their hostel expenses, and there is a proper program, I think legitimately one can claim. But any deficit financing or any one-off expenditure will not really qualify in the true spirit. Yeah.
Correct. See, in the previous question, somebody has asked whether that food is covered in the part of this thing or not, something like that. Say, if that CSR program of the organization is for eradication of hunger or poverty, if it is there, definitely it will be covered as a part of CSR expenditure. So it all depends upon. Second thing is that mostly CSR activity means that your activity, the programs which you are having a tenure of 1 year or less than that. If it is more than 1 year, if it is spilling over to 2 years or 3 years, then it is definitely an ongoing project. That is what the definition also says.
Somebody asked the question, Sudhakar, the salaries given to the CS is covered under the administrative expenditure.
Technically, to my knowledge, it should not be. It should not be. Because it is only the people who are connected to the corporate social responsibility work, if at all, in the organization. They're exclusively they are doing that. One can say that. But otherwise, technically, it is not to be done. Company secretary's salary, definitely, it should not be a part of CSR expenditure.
What adjustment is required to consider under the section 198 in serial number 41, the excess expenditure over the income which had actually arisen in computing the net profits in accordance with the sections of any year in so far as excess has not been deducted any subsequent year preceding the year in respect of which the net profit have to be ascertained.
See, Bala, the section 198, no, it is not that simple a thing to explain based on a question like this in this webinar. That is to be, I mean, discussed it separately, because 198, it is given that what are the things which are to be deductible, which are to be added back and all. If there may be some kind of an clarifications required, but it is very difficult, at least for me. I don't know about Sachin to give a clarification across the webinar like this on this particular issue. Sachin, your call.
Yeah, it's much more factual, Sudhakar. So I think much depends on what are the facts of a particular case, and accordingly because it talks of both past and future, in terms of
Correct.
deductibility. So I think
Yeah.
it's much more factual than what it is. Yeah, there was one more question which I think I can take at this juncture, which is the admin related to administrative expenses. So I think the admin expenses of the salaries, etc., of implementing agency are different, and the admin expenditure of the company is different, right? So salaries may remain salaries in both the cases, but for implementing agency, uh, you know, the company, I mean, the main company may actually prescribe certain overhead limits as 5%, 10%, etc., out of business prudence. But otherwise, the entire money which the implementing agency has spent, including on salaries, etc., to its people, should be allowed or will be allowed as a CSR spend. Yeah. But care has to be taken that one should not simply debit salaries and park it under a implementing agency, but these are genuine salary and administrative overheads related to project implementation and not otherwise.
Ministry of Corporate Affairs by letter number 12 to 2016 and the Ministry of Skill Development and Entrepreneurship by Office Memorandum MSDE 120 dated 11th March 20 have declared the industrial establishment are permitted to utilize the CSR fund for any expenditure on apprenticeship training incurred over and above the minimum requirement. What is your view on this?
I think
See, the thing is like, if I'm not wrong, whatever you're statutorily or regulatorily you're supposed to spend the money, that is not part of CSR. So if that apprenticeship, in this case also, if you have to pay bare minimum as per the Apprenticeship Act and all, if you are engaging the apprentices, then it is not a part of CSR. However, over and above that, if you are paying anything to them, you may be able to cover it. That's what my view.
What does average profit mean for less than 3 years?
What is average profit means for less than 3 years means what? If you mean to say the company's life is less than 3 years, it is a newly incorporated company.
Yeah, that is not, it appears to be.
So if it is so, it is very clearly mentioned in the act itself that if a company is incorporated in 2 years, you have to take the average of 2 years profit. If it is 1 year, you have to take the profit of that particular year. It is clearly mentioned in the act itself.
Company has implementing agency to whom fixed amount is given to the CSR spent. Now the agency spends the money on salary and administrative, including the actual CSR activity. My question is, will salary and administrative expenses of the agency of the allocated amount form part of the company's percentage spent?
I think Sanjay just covered that
I
only, I
just
think, if I'm
covered
not
that.
wrong.
Yeah.
Yeah,
And
sometime back
apart
you
from
gave
that
us.
thing, that administrative overheads of the company is only that 5% permitted, not of the implementing agency.
Due to restatement of the financial statements, the net profit of the company is more than 5 crores for the financial year 23, which it came to know while preparing the financial year for the year 24. Then what will be the implications regarding the various obligations and the times for the CSR?
What do you mean by that? I couldn't understand that. My FY 23, 22,
No,
23, which it came to.
probably when you are preparing the subsequent year's accounts, it appears the regrouping has been done for the earlier year. By doing the regrouping, it appears to be the profit which was less than 5 crores have now gone up to 5 crores in the regrouping. That is what I understand, if I'm not mistaken by reading the question. I'll read the question once again. Due to the restatement of the financials for the FY23, the net profit of the company for financial 23 has gone more than 5 crores, which came to know while preparing the financials for the year 24. Then what will be the implication and what is the time for spend of CS?
The restatement of accounts, I don't remember. Suppose if you say regrouping, because of regrouping, if it is coming, then you don't need to worry. But if you are restating the accounts by reopening the accounts and all, then it is a different thing altogether. So the question is not clear, so we cannot give an answer
Please
with
explain
the kind
that.
of information.
Please explain the average net profit for the newly incorporated company. Just now you said no, 1 year, 2 year, 3
Yeah,
years,
yeah,
actually
correct.
very clearly.
Yeah.
Okay. If the company's net profit is crossing 5 crore as on 31/3/24, and the CSR spending calculation for the past 3 years, do we have to consider the net profit for the year 24, 23, and 22?
Yes, for the year 24, 25, you have to take these 3 years.
While calculating the net profit as per section 190, is it required to add back the CSR already spent in the last financial year? That I think you discuss elaborately. Whether the company will be required to constitute the CSR committee with the CSR obligation less than 50 lakhs. I think she explained in the slide itself, it is not required. If the company
So
being
1 minute. I say, Bala,
Yeah.
what it says is that the CSR project undertaken by the company is ongoing.
Yeah.
Okay.
Yeah.
So in this case, strictly speaking, that as far as that subsection 9 is concerned, audit that CSR committee may not be applicable.
Yeah.
But however, when it is an ongoing project is there, it is the responsibility of the CSR committee to monitor the implementation of the ongoing project. However, subsection 9 clearly says whatever the obligations of CSR committee are there, the board has to discharge those responsibilities. So in this case, if you are disbanding the CSR committee, the board has to take the responsibility of the monitoring of and reviewing the ongoing project.
If the company being exempted to form the CSR committee, does it mean companies also exempted from CSR policy?
No. How can it be? See, that CSR committee exempted does not mean that particular related work nobody will do. Whatever the obligations of CSR committee are there, that is to be discharged by the board of directors. As far as CSR policy is concerned, as far as CSR expenditure is concerned, as far as other compliances are concerned, they're all intact.
For 31/3/24, net profit is above 5 crore. What is the immediate complaint? Is the board report which is to be placed in the ensuing EGM?
It is AGM, not EGM, I think.
No, 31/3 is the day of the annual closing, which is normally done only in the annual general meeting, not in the intermediary EGM. Yeah.
See, that the answer to answer this question is that 31st March 2024, the net profit is above 5 crore. So, what is the immediate compliance in the board report? So, though the accounts are not adopted in the AGM as such, but when you draw the financial statements, your profit is above 5 crores. So you have to immediately constitute the CSR committee, you have to formulate the CSR policy, you have to get the CSR expenditure approved. So you have to say in the board's report that the CSR committee is constituted, this is the composition, or the company is under the process of constituting the CSR committee. If it is not constituted by that time, because by the time you are drafting the board's report, CSR provisions are already triggered. You cannot keep quiet on that. Sachin, if you have any different views?
No, I think this is the way it is. Yeah.
Ah, okay. Thanks.
Yes.
Company is falling under the criteria under section 135, but as negative profit, if the company is required to spend the CSR amount on the form CSR 2.
I think the negative profit is as per the profit has to be calculated as per 198. So if the profit as per 198 is negative, or then no CSR has to be. It's average net profit of the last 3 years. Whatever the amount comes to 2% is what the company is required to spend. The two are different actually. Criteria
Correct.
under 135 is different, and negative profit is the next level thing.
Yeah, as you rightly said, they'll have to compute the net profit as per the section 197, 198, and they'll have to see for the last 3 years average what is working out. It is positive, 2% on that they have to spend. Otherwise, they need not. That's right. Turnover of 1,000 crores or 5 crores profit do not fit with each other. Usually, 5 crores profit associated with turnover of 50 crores to 75 crores. Meaning, there are any company having this turnover also get covered under the CSR.
So I think these are three different categories, which the turnover criteria, asset criteria, and of course the profit criteria. So the law is very clear on any of these. Basically acts as a trigger. Yeah.
Amount spent on the administrative expenses for a CSR project, whether will be considered as a CSR expenditures.
Yes, it will be subject to those, what we discussed, the norms which are there.
That 5% limit.
Correct.
For 31/3/24, net profit shows 5 crores. Companies having a own projects. All company board wants to deposit the CSR amount to schedule the activities. In this case, what is the due date for spending the CSR amount? Plus clarify.
So I take it that the company has not spent any amount as of 31st March. And therefore it has to follow the provisions with respect to unspent CSR account, which is in the case of ongoing projects or other than ongoing projects. And so depending on the nature of the project, the treatment has to happen. If it is with respect to an ongoing project, then you open a separate bank account, unspent CSR account, etc., and do comply with those conditions. In other cases, there are certain eligible funds. Schedule 7 prescribes that one has to. But the question is not clear whether the company has, not spent or spent.
Whether the project running for more than 5
Hey,
years can be.
1 minute, just to clarify that, Bala, if the company is having CSR activities, actually, let me take it CSR activities, mostly it is always within 1 year you are supposed to complete it, it is not an ongoing project. If you are not spent the money, not a single rupee, or you have spent partially but not the completely, then whatever the balance amount is there within 6 months of the closure of the financial year, you have to transfer to the specified fund. There are 4 specified funds are there under Schedule 7. PM National Relief Fund, PM Cares Fund, Ganga Relief Fund, and one more is there. What is that the last one, Dolly? You're on mute, I
Prime
think.
Minister's Relief Fund.
Prime Minister Relief Fund, PM Cares Fund, Ganga Cleanup Fund. One more is there. Anyway, so there are 4 funds are there. If it is an ongoing project, then within 30 days of the closure of the financial year, the unspent money is to be deposited into a separate bank account. At the same point of time, let me also clarify, sometimes it may so happen in the beginning of the financial year, you might have approved the CSR activities. But during the financial year, you might have, you want to convert that into an ongoing project. Board can do that thing. Board can approve that particular CSR activity into an ongoing project. Ongoing project means it may be 2 years, maybe 3 years. So the maximum is 1 + 3 years, that is total 4 years. So if it is an ongoing project, within 30 days, you can deposit it to a separate bank account. Yeah.
So with
Okay,
that,
I think Bala is not there. Dolly, you may continue with then subsequently we can take up the remaining questions.
Yes, sir.
Yeah.
So, continuing with the CSR expenditure, before that, we have seen about the applicability of the CSR. So, the board of every company shall ensure that the company spends in every financial year at least 2% of the average net profit of the company made during the 3 immediately preceding financial years. Now, where the company has not completed the period of 3 financial years since its incorporation, then they have to consider the immediately preceding financial years of completion. Company shall give preference to the local area and the area around it where it operates for spending the amount of the CSR activities. If the company fails to spend such amount, which is their obligation, the board shall, in its report of the section 134, specifies the reasons for not spending the amount. Then net profit will get calculated as per the provisions of section 198. Then there is a provision for the transfer of unspent money on the CSR activities. So there are two type of project: ongoing project and other than ongoing project. So with respect to other than ongoing project, it should get transferred within 6 months from the financial year end to the transfer to the specified funds under the Schedule 7, Prime Minister's National Relief Fund, PM CARES Fund, Clean Ganga Fund set up by central government, Swachh Bharat Kosh set up by central government for promotion of sanitation. When we talk about there can be an excess amount than the obligation. In that case, the company spends on CSR activities in excess of its obligation of 2%. Then such company can take set off of such excess spend against the obligation to spend in immediately succeeding 3 financial years, subject to following 2 conditions. First is about excess amount available for set off shall not include the surplus arising out of CSR activities. And the second condition is the board is required to pass the resolution to that effect.
1 minute here, Dolly. Sometimes the wording is spent in immediate succeeding 3 financial years. The set off has to take place. Several times the question asked to me is that the company is not having profits for next 2 years. The third year, the profit is there. So from the third year onwards, again, another 2 years, we can take it. Answer is no. Whether you have profits or not, you have to set off only against the succeeding 3 financial years. If in any of the financial year or during all the 3 financial years, if you don't have profits, you cannot take the set off at all.
Yes, sir.
Some question is there. I think please explain this slide of the transfer of unspent money on CSR activities again. See, this is a most crucial thing that subsection 5 says that if any amount is not spent. See, before that, let me also say section 135 says that clearly CSR money is to be spent. Means earlier it used to be there, you cut a check on 31st March. People used to think that they have discharged their responsibility, their obligation of giving this. 31st March, they used to cut a check for the CSR amount in favor of the implementing agency. Whereas under the revised rules and revised section, now it is very clear. You have to spend the entire money before 31st March of the financial year. Number one. Number two, if it is a CSR activities, that means it is not an ongoing project. In such case, the entire money, suppose 2% of the money come to say 50 lakh rupees, you have to spend the 50 lakh rupees before 31st of March. Sometimes a question comes, sir, that the work is not being done, that the advance has been paid or something like that. These are all stories. Nobody will take that thing. You have to spend the money by 31st March. If money is not spent, say out of 50 lakhs, you have spent only 20 lakhs, 30 lakhs could not be spent. In such case, that 30 lakh rupees is to be deposited within 6 months to the specified fund. Second alternate is if it is an ongoing project. In that ongoing project, again, the CSR obligation is 50 lakh rupees. You have spent 20 lakhs. 30 lakhs is not spent. That 30 lakhs is to be deposited within 30 days in a separate bank account as unspent money account of so and so this thing account like that. In this case, also suppose there are two ongoing projects are there. Sometimes a question has been asked whether you have to open two separate bank accounts. Answer is no. One bank account is sufficient. And while depositing the money, you be clear that how much money is balanced in respect of which ongoing project and deposit it accordingly. You don't need to open two separate bank accounts for this. Yeah, go ahead, Lodi.
Yes, sir. So just now, sir has already spoken about the, in case of ongoing project, if there is any unspent money on the CSR, the company has to deposit that in the special account within 30 days from the financial year end. The company has to spend it in a period of 3 financial years from the date of such transfer in the scheduled bank account. After 3 financial years, if anything remains unspent, the same need to be transferred to a fund specified in Schedule 7, which are this 4 fund, Prime Minister's National Relief Fund, PM CARES Fund, Clean Ganga Fund, and Swachh Bharat Kosh. Company has to transfer into the Schedule 7 within a period of 30 days from the date of completion of the 3rd financial year. Then moving onwards, there is a cap given for the administrative overheads under the sub-rule 1 of Rule 7. CSR rule states that the board shall ensure that the administrative overhead shall not exceed 5% of the total CSR expenditure of the company for the financial year. Sub-rule 2 of the Rule 7 states about the surplus from the CSR. If there is any surplus arising out of the CSR activities, shall not form part of the business profit of the company. Such surplus to be plugged back into the same project or shall be transferred to the unspent CSR account. Any unspent CSR amount need to be spent by the company as per its CSR policy and annual action plan of the company, or to be transferred to a fund specified in Schedule 7 within a period of 6 months from the end of the financial year.
Only one interesting question has come. Somebody asked this question. A company has planned spend on both CSR activities, that is an ongoing projects, and projects other than an ongoing projects. The company has spent excess amount in respect of projects other than ongoing project and incurred lesser amount for an ongoing project. The question is whether the excess amount spent for projects other than ongoing can be adjusted against the expenditure for ongoing projects. Of course, before I invite Sachin to give this thing, according to me, these two are separate because the CSR committee, when they're approving the expenditure, they have to clearly demarcate how much is an ongoing project expenditure, what is the project cost, and all those things. And similarly, other than ongoing project. So if you have spent excess on the other than ongoing project, that set off you have to take it in the future. As far as the ongoing project is concerned, whatever the balance amount is there, you have to deposit it to a separate bank account. Sachin, your views, please.
Yeah, that's absolutely right. In fact, you have to go back to the provision. See, the ongoing projects are unique because it is the board which is required to monitor the implementation of these ongoing projects. So a specific responsibility has been cast on the board of the company And therefore, even in statutory disclosures and all, there are two separate line items with respect to ongoing and other than ongoing. So if there is any deficit in ongoing projects, that has to be dealt with in a separate way. And if there is any excess spent on other than ongoing, then perhaps the company can claim, in the future year, that set off. But I think it's a very critical question here. Yeah. And one related point here, I mean, that also perhaps answers some of the previous questions, relates to the fact that companies must do advanced planning of their CSR spend to ensure that these situations do not arise. So, often for managing the cash flows and otherwise, the disbursement and the expenditure is actually pushed to March and February, and that's not really a healthy practice. As soon as the board of the company has approved the CSR amount and the annual action plan, uh, it's a good practice for the company to start working on the implementation schedule so that they have enough time to spend that money and there is no last minute pressure or otherwise, challenges like this arising.
That's very rightly said.
Yeah, so can we move?
Yeah, go ahead.
Okay, so then there is a provision for the set off of excess CSR amount. Sub-rule 3 of Rule 7 talks about where a company spends an amount in excess of the requirement provided under the subsection 5 of section 135. Such excess amount may be set off against the requirement to spend under subsection 5 of section 135 up to 3 succeeding immediately of 3 financial years. I think we have covered this already. Yeah. So we will move ahead. Sub-rule 4 of Rule 7 talks about the capital asset. The CSR amount may be spent by a company for creation or acquisition of a capital asset, which shall be held by a company established under Section 8 of the Act or registered public trust or registered society having charitable object and CSR number, CSR registration number, which entity gets on the filing of Form CSR 1 or beneficiaries of the state CSR project, which can be in the form of self-help groups, collectives, entities, or a public authority. Any capital asset created by a company prior to the commencement of the company's Corporate Social Responsibility Amendment Rules 2021 shall, within a period of 180 days from such commencement, comply with the requirement of these rules. Yes, Sachin, sir.
Yeah, there was a question asked. So I think maybe I can explain this provision with respect to the question. The question was, can a company initiate the construction of a building and subsequently transfer first floor to an NGO for hospital, second floor to a school and old age home, etc. And whether this action constitutes direct implementation of CSR by the company or implementing agency. So my response, if you read the provisions here, it very clearly says the company may the CSM amount may be spent by a company for a creation of a capital asset. So in this particular case, the company has spent money on, let's say, construction of a building which has one floor as a hospital, a second floor as an old age home, etc. So it qualifies as a CSR uh, uh, direct spend. But the remaining two provisions are important. I assume that the NGOs which are being referred to fulfill these A, B, C criteria. If they do, then the company is in compliance with the provisions.
See, one more thing also, I think one more interesting question has come to only that if on the ongoing project, if on 31st March they have not spent the money which is to be deposited within 30 days in a separate bank account, the participant is asking that before depositing in the 30 days, if we spend the money, whether I don't need, whether if I am not depositing, is it a non-compliance? Answer is yes, it is a non-compliance. Because you are supposed to deposit the money, whether you deposit it, spend it within 30 days or not. What you have to do is on day one, you deposit it. From there, you spend the money. That is a compliance. But if you are not depositing because you are going to spend within the 30 days, it is going to be a non-compliance. Number one. Number two, if in case of CSR activities, you are not able to spend the money within that 1 year, within 6 months of that, you have to deposit into the specified fund. Several times the question comes, within that 6 months, we are going to spend the money. Do I need to deposit in the specified fund? Again, answer is yes. You are supposed to spend it before 31st March. If you are not spend it, even if you spend it subsequently, it doesn't matter. You have to deposit in the separate bank account or with the specified fund, whatever is required under Section 5, subsection 5.
Yeah. Sir, do we want to take more questions?
I think Bala is not there, I think, because I'm just taking up only the questions which are relevant immediately. That's what I'm taking up. Otherwise, in the meantime, you can go ahead.
Yeah. So now we will understand about the impact assessment as per Rule 8.3.
So here, one of the questions which one of the participants has asked is, who is eligible to conduct impact assessment study? So while the provisions are well explained here, I think there are no eligibility quote the norms that the rules have prescribed, but it has to be an independent third party agency with requisite qualifications and experience of conducting a socio-economic impact assessment, as is commonly prevalent. And a company may appoint even an international agency also for designing these kind of studies, etc. So that, I hope, answers the question on who's eligible to conduct impact assessment studies.
So sorry, there was some issue with the network. So Rule 8.3 brings the requirement of the impact assessment. First, we will check its applicability. Every company having average CSR obligation of 10 crore or more in the 3 immediately preceding financial years shall undertake the impact assessment through an independent agency of their CSR project having outlays of 1 crore or more, and which have been completed not less than 1 year before undertaking the impact study. Impact assessment shall be carried out project-wise only in cases where both the above conditions are fulfilled. In other cases, it can be taken up by the company on a voluntary level. This Rule 8.3 applies to the project completed on or after 22nd January 2021. Then there is a provision for the impact assessment report, which shall be placed before the board and shall be annexed to the annual report on CSR. It is clarified that the web link to access the complete impact assessment report and providing executive summary of the impact assessment reports in the annual report on CSR shall be considered as sufficient compliance of the said rule. Mention the necessary details like amount spent on the impact assessment in Annexure 2 format given for the annual report on CSR activities, which is to be included in the board's report.
See, several times one question comes, impact assessment is to be conducted when? Suppose though that impact assessment is mandatory for that particular company because it is having that more than 10 lakh rupees CSR obligation. But the only thing is that, so I think 10 crores or 10 lakhs it is. Dolly, go to the previous slide.
Just a second.
spent.
Yeah, it's a 10 crore rupees.
10 crores, sorry, not 10 lakh, 10 crores. If it is
Yeah.
10 crores, so suppose if that impact assessment is mandatory for them, after completion of the project, there should be a 1 year gap, and then they have to take up the impact assessment. However, whether the impact assessment is to be immediately taken up, that is not there in the rules anywhere. Only thing what the CSR committee has to do it, as well as the board has to take a note of that is when the impact assessment is going to be due. Say, for example, if I take up a project of an educational institution, by the time the project is going to have an impact, it may take 2, 3 years before the first batch comes out of the school. Same may be the case of any eradication of hunger, eradication of poverty, or any kind of thing like that. Sometimes the project, by the time it is going to have the impact, it may take 2, 3 years. So the CSR committee has to take a note of that. The impact assessment will be conducted after 2 years, after 3 years, whatever it is. So even if the regulator comes and asks you a question that why the impact assessment has not been done, you can always say that, look, this particular project has been completed on this date. We are going to conduct the impact assessment on this date. This is what the CSR committee has arrived at and noted it also. If you are simply keeping quiet, suppose after 2 years or 3 years, if the regulator comes and you are not able to answer it properly, then it may amount to a non-compliance. Sachin, your views here.
No, absolutely right. I think the whole idea of 1 year cooling off period after the year is basically, for the projects to mature and the outcomes to be delivered. However, because the board is also entrusted with, regular monitoring, may come to a view that for a particular project, the outcomes or the impacts may take more than 1 year. In such a case, it would be appraising itself of the project progress on a concurrent basis. So it is fulfilling its mandate. And for the statutory purpose, the study can be conducted after maybe 2 years or 3 years, depending on the project.
Yes.
It's a very, very important part of the compliance mechanism, and uh, the impact assessment reports are also required to be published and and should be there on the public domain. And yeah, I mean, for those of us here, I think HDFC Bank, if one visits, is a good case study as part of our practitioners learners. You can go through the website. I mean, they have a huge repository of how these impact assessment studies are done, and you can get a sample of it. Yeah, thank you.
Yeah, so now we will understand about the impact assessment expenditure. So a company is undertaking impact assessment study may book the expenditure towards CSR for that financial year, which shall not exceed 2% of the total CSR expenditure for that financial year, or 50 lakh rupees, whichever is higher. And it is important to note that this expenditure to be of 2%, to be claimed, on impact assessment is over and above the specified administrative overheads of 5%. So as we have understood that CSR activity can be conducted either by the company or they can have the implementing partner. So let's have a look at the rule 4, sub rule 1, where the board shall ensure that the CSR activities are undertaken by the company itself or through a company established under the section 8 of the Act, or a registered public trust or a registered society, which are exempted under subclause 4 to 6A of clause 23C of the section 10, or registered under section 12A and approved under 80G of the Income Tax Act, which are established by the company either singly or along with any other company, or a company registered, established under section 8 of the Act, or registered trust or registered society, which are established by the central government or state government, or any entity established under any act of the parliament or state legislature, or a company established under section 8 or registered public trust, or a society and having an established track record of at least 3 years in undertaking the similar activities, they can be the implementing partner for the CSR activities. Then there are various modes of the CSR implementation. A company may engage international organizations for designing, monitoring, and evaluation of the CSR project or program as per its CSR policy, as well as for capacity building of their own personnel for CSR. A company may also collaborate with other companies for undertaking projects or programs or CSR activities in such a manner that the CSR committee of respective companies are in a position to report separately on such project or programs in accordance with these rules. Then there is an important provision, sub-rule 5 of rule 4, which talks about the certification from the CFO. The CFO or the person responsible for the financial management shall certify about the funds so disbursed have been utilized for the purpose approved by the board. So here it is talking about the approved by the board. So basically, which is mentioned in the former annual action plan and the CSR policy. So in addition to the monitoring by the board, it requires the CFO or alike to give the utilization certificate of the disbursement made. Then there is a provision again for the ongoing project. In case of ongoing project, the board of a company shall monitor the implementation of the project with reference to the approved timelines and year-wise allocation, and shall be competent to make the modifications, if any, for the smooth implementation of the project within the overall permissible time period.
Yeah, I think there was a, Dolly, just to interject here, there was a question earlier with respect to, this particular provision, whether a 5-year project can be there as ongoing project or not. So I hope this, this provision answers the question.
Yes. Yes.
So in fact, one more thing also comes that sometimes the question comes, if the project is a longer project having 5-6 years of tenure, how to take that thing, because it is only 1 + 3 years is permitted. In such case, you have to take up that, you have to divide it into 2 phases. Take phase 1 as one project and phase 2 as the second project. You have to divide it into phases. That is the only thing. One thing you have to ensure, the year in which you are approving ongoing project plus another 3 years. That is the maximum. You can't go beyond.
Yes, sir.
And one more thing also is that the CFO certificate in the previous slide, that as a CSR committee, if any participant is a director of a company and a member of a CSR committee, simply don't take that CFO certificate, whatever he is giving it on record, and then you keep quiet. You are supposed to ensure that monitoring the CSR project is the obligation of CSR committee. Reviewing the CSR implementation activities as well as the project is again obligation of the CSR committee. So if the CFO is giving a certificate, please do question him that based on what he has arrived at. Has he visited the project or has he deputed anybody to visit the project? How he got convinced about the expenditure? So especially if it is through implementation agency, how the CFO is giving that certificate. It should not be a backup to backup certificate kind of thing. That CSR committee has to ensure it. Yeah.
Yeah, so now let's understand about the form CSR 1 applicability. As per sub-rule 2 of rule 4, every entity who intends to undertake any CSR activity shall register itself with the central government by filing the form CSR 1 electronically with registrar. Form CSR1 shall be signed and shall be verified digitally by a chartered accountant in practice or a company secretary in practice or a cost accountant in practice. On submission of the Form CSR1 on the portal, a unique CSR number shall be generated by the system automatically. And there is another form as well, Form CSR2, which is a report on the CSR. Companies will have to provide the following: the details of the CSR amount spent in the 3 preceding financial years, and details of all ongoing project, details of their CSR committee, details of the CSR disclosures on the website, net profit and other details of the company for the preceding financial years. Also about the capital assets that have been created or acquired through CSR spending. And this is the last provision of the section 135, subsection 7, which is talking about the penalty, which is a very important subsection of the section 135, which has introduced monetary penalties for the company and every officer of the company who is in default for non-compliance in the provisions relating to undertaking CSR expenditure and transfer of unspent CSR account or Schedule 7 fund. So basically it is talking about the subsection 5 of section 135, non-compliance. A defaulting company is now liable for the lesser of rupees 1 crore only, or twice the amount that should have been transferred to the unspent CSR account or the Schedule 7 specified fund. Additionally, every officer of the company who is in default is now liable for the lesser of rupees 2 lakh or 1/10 of the amount that should have been transferred to the unspent CSR account or the Schedule 7 specified fund. So this is the Schedule 7, where there are many activities like healthcare, eliminating poverty, sanitation, clean water, education, vocational skills, rural development, amount spent for the technology incubators, Prime Minister's Relief Fund, National Heritage Art or Culture, slum area development. Basically, Schedule 7 is in the high-level committee report 2015. The committee has tried to align these sustainable development goals along with the Schedule 7 activities. Then there are some of the case laws we have taken here. This is the first case law, which is talking about the importance of the compliance of the formulation of CSR committee. So, adjudication order passed by the ROC of the Chennai on 11 July 2023 in the matter of Takraf India Private Limited, and they have adjudicated the penalty under section 454 of the Companies Act, read with rules 3 of the Companies Adjudication of Penalties rules 2014 for violation of provisions of section 135 subsection 5 of the Companies Act 2013. The company was required to spend rupees 16,33,276 during the financial year 2021 as a part of its CSR obligation. But the company had spent rupees 1,83,276 during the financial year 2021 on an ongoing project duly identified by the board, and could not spend the balance amount of rupees 14,50,000 on or before 31st March 2021. The company had failed to comply with the requirement of opening a special account and transferring the unspent of that CSR obligation amount of rupees 14,50,000 within the given timeline as specified under the Act. In this particular case, the company, its managing director, 3 of the directors and the company secretary of the company were penalized for not transferring the unspent CSR amount within the prescribed time limit and utilizing the same in the subsequent year. Due to this non-transfer of the unspent amount to the specified fund, the company, its directors, along with the company secretary, they had to face a penalty amounting to rupees 36.25 lakhs, which is more than 2.5 times of the unspent amount. So basically, here the adjudicating officer has imposed a penalty of rupees 29 lakhs on a company and rupees 1,45,000 on each directors and the company secretary of the company. So basically, this case study is a case of non-transfer of unspent amount within the given timeline. Moving onwards to second case study, where the order of penalty pursuant to Section 135 of the Companies Act by ROC of Delhi and Haryana to ACOM India Private Limited. The company has spent rupees 65 lakhs 53,120 on account of CSR during the financial year 21-22. Subsequently, the company noticed a calculation error, and as per the revised calculation, the spending requirement, the spending obligation was rupees 71 lakh 88,446, which resulted in an underspending of rupees 6 lakh 35,326 towards its CSR obligation for financial year 21 and 22. The company came to know about this unspent amount, rupees 6 lakh 35,326, after the expiry of the time limit of 6 months from the end of the financial year, provided in the law for the transfer of unspent amount to the funds specified in Schedule 7. Subsequently, the company transferred that amount to a PM CARES fund on December 9, 2022. So it is again not it was not again within the timeline. The adjudicating officer has imposed penalty of rupees 12,70,652 on the company and rupees 63,533 on each of the two whole-time directors. So this is the case of first wrong calculation of the CSR obligation, and second, untimely transfer of the unspent CSR amount. In the third case, Precision Automation and Robotics Private Limited, where they had to pay the penalty for the non-constitution of the CSR committee. So in the given case, the applicant company and its officer who have defaulted the provisions of Section 135 of the Act, as the company defaulted in the constitution of CSR committee and are liable for penalties under Section 450 of the Companies Amendment Act 2020. The adjudicating officer has imposed a penalty of rupees 2 lakh on the company and 50,000 on each director's, CFO, and the company secretary of the company. Here, the company has to pay a heavy amount of penalty for non-constitution of CSR committee besides much of its time. So,
Dolly, I think these case studies are very, very useful, and I think I have just 3 points here.
Yeah.
If you go to the first case law, if you can just
Yeah.
turn the slides, yes. I think here it's important that the how the projects are actually defined. So I think the companies must spend enough time in terms of identifying the right kind of project, right kind of timelines, and also ensure closer monitoring of those projects, so that these situations do not arise, as in whether it's an ongoing project versus other than ongoing projects. So it's very important that even the planning department in any company is aware of these provisions and the likely implication of classifying a particular project. In the next case law, if you can just go to the next law. This is a case of under some calculation error. So I think my recommendation is that the company should ask for or obtain an independent auditor's certificate on 198 calculation, these are tricky provisions. So it's always good to obtain an independent view of the likely 2% obligation, number one. Secondly, from a conservative point of view, companies, there's no harm if a particular company spends, let's say, 2.01%. It's always good to keep some cushion, especially, and not to, spend exactly down to the last rupee, because even these are all interpretation issues. And should there be any question tomorrow uh, on uh, on the calculation of 198, etc., profit, the company will have some cushion to tide over. So that's number two. And number three case study, if you can just turn your focus. Right. Here that, basically, it is also important for all the directors to be aware of all these obligations also with respect to CSR. This is irrespective of the amount. And I think that point needs to be emphasized. And that is something which I had started at the beginning, that there are over 24,000 companies now in Government of India, regulators databases. So irrespective of the amount which is involved, this is a compliance issue, and both in letter and spirit, it needs to be kind of complied with. Yeah, thank you.
Sachin, as you rightly said, as far as the calculation is concerned, it is better to get it evaluated by a third party. In case of related party transactions, we always suggest that it is when it comes to ordinary course of business and arm's length, that point of time we say it is always advisable when the stakes are high to go for a third party audit. So it gives a comfort to the board as well as to the company also. Similarly, here also, because the CSR, the workings are, as you rightly said, 198 calculations are a bit tricky. At the same point of time, I mean, within 30 days it's to be deposited, or can I spend the money? These kind of questions, it is always better to take a professional advice, and so that, otherwise the penal provisions are quite stringent. Here, you might have seen that the ROC is imposing whatever the maximum amount is there, he's imposing that without any kind of sympathy or this thing. Number one. Number two, if I am not wrong, Dolly has mentioned also, subsection 7 says for the non-compliance of subsection 5 and 6, it is not a fine, it is penalty. And penalty cannot be compounded if I am not wrong. Only fine can be compounded. For penalty, you have to simply deposit that only. There is no question of any compounding. So one has to be very careful about these things. Yeah. Yes, Bala, you may take up the questions now. Is Bala there? I think he got logged out, I think. Okay, let us take up the questions. Anything interesting is there? Company contribute 1 crore to implement agency on April 23. The IA is not utilized the amount during 23-24. That is, utilization certificate is not available. What to do?
Yes, so it's the same thing. Mere disbursement is not akin to utilization. So I think
That means what? Without you have given the entire 1 crore rupees without even monitoring the implementation of the project.
correct.
You see, that is what we said, that CSR committee's responsibility and board's responsibility is to review the implementation of CSR project. It looks like you have given 1 crore rupees to the implementing agency, and now you are saying that they have not given the utilization certificate. But have you ensured they utilized that money? So that you have to see. Suppose if they are not giving utilization certificate, that is a different question altogether. But have they really spent the money? Have you ensured that? What your CFO has done for that? These are all the questions the regulator will ask you tomorrow. whether a company will be treated as a defaulting company if it came to know the current year 24 that it has net profit of more than 5 crore in financial year 22-20. I think we have already discussed this issue now. When you say monitoring, do CFO need to get audit report kind of thing or anything else? See, when I say that monitoring means it is the CFO who has to ensure that, in fact, according to me, the entire money should not be given to the implementing agency at one go. If I am the CFO is the company, what I will do is I will give the phase-wise implementation. He's not going to spend the whole money today. If you are engaging a contractor to construct your house, are you going to give him the entire money today? Or you are booking a society flat, are you going to give the entire money? You will disburse the proceeds depending upon the progress of the project. Here also the same thing here. So the CSR committee has to ensure the implementation of the project and review the expenditure, whatever is there. So they have to do the site visits also. That is what I said at that point of time. This we have discussed it. Filing CSR to a company is not entitled to spend CSR activities under the Act, but it has spent CSR for 2 years. Can this expenditure be treated as CSR expenditure for the 2 years to be adjusted against CSR entitlement of the company in the third year? What I understood from this question is first 2 years they have spent the money voluntarily, and the third year CSR obligation is there. Their question is, can they set off that CSR 2 years to the third year? Answer is no. Because first 2 years you have spent the money voluntarily. It is not an excess expenditure or something like that. Excess expenditure means what? You have an obligation, over and above that obligation, you have spent the money that you can set off. In this question, if I understood it correctly, first 2 years you have spent the money voluntarily. Third year, the obligation is there. So whatever the obligation is there, you have to spend the full money. No set off is permitted. Such in your views here.
No, correct. There's no provision for voluntary spend. The act only deals with excess spend, and that way.
Okay.
It's a good thing for a company to spend on as part of its CSR, but it's a voluntary spend at the end of the day.
Another question is, our holding company has created Section 8 company as a subsidiary and spent CSR amount through Section 8 company, whether contribution given to Section 8 comes under related party transactions under Section 188 for holding the company. See, this is whenever I used to address on related party transactions, I always say in the beginning itself, to understand Section 188 and Section 177, there are two sections which we have to comply with as far as RPT is concerned. One is board approval, second one is audit committee approval. 188 talks about certain transactions which requires board approval. Subsection 1, A to F. Only those transactions require board approval under Section 188. And CSR does not fall in that six transactions. So 188 is not applicable. However, since it is a transaction with a related party, Section 177 is definitely applicable. So you have to have the approval of audit committee. So in this case, what you have to do is the CSR committee has to recommend the amount to be spent to the board. And since there is a related party transaction is there, audit committee too has to examine it and it has to give its approval. Based on these two, board has to give the approval for the CSR expenditure. Any views, Sachin?
No, that's fine. Okay. Those RTP provisions need to kind of follow.
Yeah. Is the company board obligated to classify the project as ongoing or normal at the time of sanction itself? If so, can the company classify all the projects as ongoing to avoid hurried completion of the project before the deadline? Yes,
I
Sachin.
think the onus is on the company to classify the projects as ongoing or other than ongoing. However, the board must be aware of the responsibilities that it carries with respect to any unspent amount with arising out of or monitoring requirements with respect to ongoing projects or otherwise. It should not be, this classification should not be looked at as a convenience uh, factor. I mean, it has to be far more strategic in nature, and there is a logic why ongoing and other than ongoing has been defined, because obviously there are some projects which are of shorter duration, whereas which have immediate impacts, and there are certain projects like infrastructure related schools, hospitals, etc., which have a more than 1 year usual gestation period. So this
See, that over and above whatever you have said, further to add to that, ongoing project, there is a definition. Please see the definition clearly. And similarly, suppose, say, for example, eradication of hunger. Can you call it as an ongoing project? It is not so, it is a CSR activity because throughout the year you have to spend the money for that particular purpose. Next year again it comes under CSR activity. Mostly ongoing projects means where you have the capital expenditure is there, construction activity is there. Most of the times ongoing project is that. Alternately, sometimes it may so happen, in addition to the capital expenditure, you have to also have the operational expenditure. So you have to see very clearly, just to rush up the project, it should not be an ongoing project and all. You have to see whether it is falling under the definition of ongoing project, number one. Number two, when you are initially approving that as a CSR activity, but subsequently you realize that it is going to be an ongoing project, during the year also you can approve it as an ongoing project. So not necessarily every activity you have to call it as an ongoing project and you are going to complete within 1 year only. Then it will give an impression that you don't know what is a CSR activity and what is an ongoing project.
There's one interesting question on distribution of LED. Uh, 1 minute, where is that question? On LED, equipments. That will, one sec, let me just go to that question. Distribution of LED TVs, whether that will constitute as a capital expenditure. Dolly, can you see that question? I mean, I just saw, but it kind of skipped. And I think it's an important question. Yeah, this is whether distribution of LED TV to school for smart classes is to be treated as a capital asset. Now, and we book the expenses as revenue in nature. Now, distribution of, if the company acquires LED TV, which itself is a capital asset, and then if that's the way it is doing, I'm assuming that the company is doing it direct implementation. If that be the case, then it is a capital expenditure, and then those LED TV, it has to donate it to whatever the agencies which have been kind of the eligible agency. A better way to do this would be to identify uh, the school or which is under which fulfills the criteria for implementing agency, and give it directly to as a grant to that particular school for acquiring these assets. Renovate of school buildings is treated as capital assets. By renovation, I mean it's the uh, regular repairs, maintenance, refurbishment. That will be a revenue expenditure. Although
Yeah.
strictly from an accountant's perspective, the benefit might be for an extended period of time, etc. And but for all practical purposes, from CSR perspective, it is a revenue expenditure. No new asset is actually coming into creation. That's my view.
Yeah. Okay.
There was
Okay. Any participant wants to ask the questions, they can raise their
so there
hand.
was a
Otherwise,
very sir, if I may take that one question here, this was very interesting with respect to spend on digital media, etc., on cervical, cancer awareness, etc. It had come up. So I think the response is that you have to refer to the provisions of the CSR rule itself. What does not constitute CSR? If the expenditure on public awareness, etc., is leading to increased brand awareness or brand promotion directly or indirectly, it will not be a CSR expenditure. If it is a general public service message with clear disclaimers and no association with promoting a particular brand or a commercial activity, then such awareness programs using digital media would qualify as a healthcare awareness or education awareness program. But the guiding principles in deciding any activity, whether it's CSR or not, is to go to rule 2, where the definitions and what is not CSR. And I think the rules are very, very clear on that front. Thank you.
Bala sir is facing some network issues, so we can, proceed further.
Pardon?
Bala sir is facing some network issue, although he's trying to
Okay,
from his
okay.
phone. Yeah.
Can the amount transferred to unspent CSR account in excess of the unspent CSR amount be withdrawn from the unspent CSR account? Technically, it can be, because you are supposed to deposit only whatever the amount you are supposed to spend, or alternately, whatever the amount excess you have transferred, if you have the CSR obligation, you can spend from that money. What is the issue? Suppose if you don't have any CSR obligation, how can it be? Because ongoing project is there. Anyway, you have to incur money. So from this account itself, you can incur that expenditure. If a company is in the project stage and there is no obligation to incur the expenses, however, the company has incurred some expenses voluntarily, then whether the expenses can be capitalized as a project cost. Can the CSR expenses can be set off in future period once obligation is started? As I told you earlier also that voluntarily CSR expenditure, if anything is there, that cannot be set off in the future CSR obligations. As far as the capitalization is concerned, because CSR is not applicable to you, don't call it as a CSR, and you can do the capitalization if you want it. But if you want to recognize it as a CSR asset in the books of the company, that is not possible.
I think just one pointer here, sir, is that each and every social welfare expenditure need not be a CSR expenditure. I think CSR, there is a very well-defined structure, definition, and a rule framework that exists. So any and every expenditure by a company on which is non-business related cannot be considered as CSR, and I think that's a distinction we must make because this question often comes up.
Can the CSR activity be out of the same business of the company? Example, construction company donating a building or so. See, what CSR says is if the company is having the products, company products cannot be utilized. Let's say, for example, if Nestle is there, Nestle cannot donate the Maggi noodles as a CSR activity. However, Nestle can buy the noodles from some other competitor of its, and then that is a CSR. If it is distributing it, yes, it is a CSR activity. In this case, because construction company it is, building is not a product as such. So if it is going to donate a building, it's an ongoing project. And the only thing what you have to ensure is that building which is under construction going to be in the trust name or a foundation name, whatever it is, which should not be the name of the company. That's it. No questions in chat box. If anybody wants to raise the question, they can raise the hand and they can unmute and can speak. Otherwise, we can wind up for today. I think it's exactly 1 o'clock.
I think, sir, we have taken almost all the questions.
Yeah. So only thing is, once again, my advice submission to all the participants is that CSR, don't take it very lightly, a very complicated subject. Wherever you have any issues, take professional guidance, or alternately, please go through the rules, please go through the provisions of the section, please go through the FAQs of MCA, ICAI, ICSI, as well as ICSI guidance notes. If you go through these things, definitely you will be better equipped to handle CSR compliances. Thanks very much once again to all of you. God bless. Good night. Okay,
Thank you
sorry.
so much.
Thanks a lot to
I'm
everybody.
saying good night
sorry.
because I have
Small
here it is good
internet
night for me.
problems.
But pardon?
Bala sir has joined us.
Tell him good night.
Anyway, thanks a lot. Sorry for the inconvenience.
Thank you, everyone.
Thanks a lot, Sachin, for your contribution. Thank you so much.
Thank you. Bye-bye.
Appreciate it. Yeah.
Thank you, Sachin sir, Sudhakar sir, and Bala sir for giving your inputs. Yeah. Have a nice day, everyone. Yeah.
Such a complicated subject. Thank you much.